federal tax policy for a new year. What's that going to mean for fundraising, especially from the business sector? Hi, I'm Bill Stanczykiewicz. Welcome to the first day from the fundraising school. And as we enter this new year, it's a good time to have a refresher on the new federal tax policy. Yes, the tax policies were put into law back in July of 2025, but most of the policies affecting charitable giving did not take effect until January 1, 2026. So let's take a quick refresher, but especially spend some time on what this might or might not mean in terms of fundraising from the business sector. First of all, one of the new policies effective right now in this new year is the Universal Charitable Deduction. The UCD is back, and it's back bigger than ever before. Remember, this was part of federal tax policy until it ended in about 1986. Came back during COVID for a couple of years. And at that time, an individual could enjoy the UCD at $300, a household filing jointly at $600, meaning even if you did not itemize, you could still get tax consideration for your charitable giving. Well, that policy went away as the worst days of COVID came to an end. The Universal Charitable Deduction is back, but now at $1,000 for an individual and $2,000 for the household filing jointly. And of course, this is great news. This democratizes tax consideration for charitable giving. Basically, anybody who makes a charitable donation in the United States and fills out a tax form can now receive tax consideration for their charitable giving. All donors at any level. Wow, that's a great message for our annual fund, isn't it? Especially if we're building the base, entry-level type donations, those initial levels of donations as you're writing your fundraising letters, having your events, sending out fundraising appeals and information on digital channels, any of the ways you're communicating with your donors, make sure they are now aware of the Universal Charitable Deduction. Now, also in place is this new ceiling and this new floor. The ceiling basically is anybody who's at the top federal tax rate, 37%, now can itemize as if they were at the 35% level. And the floor is that people who aren't in that 37% level cannot deduct the first 0.5% of their adjusted gross income. Starts sounding kind of complicated. Well, here's something to keep in mind. This is basically the wealthiest Americans, the top 1% of income earners in the United States. So number one, if you don't have those folks, and the top 1% is about $650,000 for an individual, about $725,000 for a household filing jointly. If those folks aren't in your donor database, then this is a moot point. The ceiling and the floor aren't going to apply to you. But if they are, good for you. And it's something you just need to be talking with them about. Is that going to change their charitable giving strategy? Is their charitable giving going to decrease because of these new rules? Actually, an argument can be made that their charitable giving is going to increase because of these new rules, because they kind of have a target of the amount of the tax deduction they need to take on their taxes associated with their charitable giving. And so, again, donor relations is going to be your friend always, including on this discussion about the ceiling and the floor. Now, the one new tax consideration that went into place last year was the ability to itemize for state and local taxes. The so-called SALT deduction went from a maximum of $10,000 all the way up to $40,000. Now, when that limit dropped to $10,000 back in 2017, we saw a significant number of people no longer able to itemize that, plus the increase in the standard deduction. With the SALT deduction going up, more people will now be able to itemize, even with the comparatively higher standard deduction. Our school's research shows itemization is correlated with charitable giving. Taxes aren't the first reason. They're not the only reason, but they can be part of a reason as people think about their charitable giving. And now, as more people are able to itemize because of their increased SALT deduction, that might be a factor in encouraging them to donate and donate more to your nonprofit organization. Again, a good conversation to have with your donors. So again, that's a primer, some of the basics that have been in place. The big question mark is what's going to happen with charitable giving from the business sector? Because the business sector has a new limit in terms of the tax deductibility of its charitable giving. Under federal law, this goes back to almost 100 years ago, businesses have been able to deduct the first 10% of their pre-tax profits if that amount is given to charity. However, now businesses cannot deduct the first 1% of that 10%. Why is this an issue? Because on average, according to Giving USA, the business sector donates about 1% of their pre-tax profits. I didn't take a lot of math at Northwestern, and I know also in our international locations, there's the metric system, but however you slice it, 1 minus 1 is still 0. And people are thinking, the business sector donates 1% of their pre-tax profits, and now that's the amount that's no longer tax deductible. Is business sector charitable giving going to dry up? Maybe, but maybe not. And here's why. Our school's research shows that businesses donate to nonprofits primarily for 4 distinct reasons. The first one is government relations. All businesses are regulated by the government or by various levels of government, local and or state and or federal. And a lot of times businesses will use their charitable giving in part to maintain a good, strong relationship with those governing authorities. They like to say we have this community service that we do, and that includes our charitable giving to local nonprofits. And they keep record of that and show that they're being a good neighbor anytime they're intersecting with government. So government relations, number one. Number 2 is employee relations, that businesses use their charitable giving for employee recruitment, retention, and morale to let possible employees know this is part of what it means to work at our organization. Therefore, don't you want to work here? As they do so with things like employee matching programs, like giving paid time off to go volunteer, to have group activities where everybody gets the T-shirt and goes out and does the activity with the local nonprofit organization. And so employee relations also is a factor that businesses take into account when they're making their charitable donation decisions. So government relations, employee relations, and then altruism, just that the businesses care, that they want to have a community that their employees want to live in, that they want to live in, that it's a good community for their customers, or they care about a particular topic that's associated with their product, like a food services company would be interested in alleviating hunger. Everybody's interested in alleviating hunger, of course, but that might be the particular charitable giving focus of that company that's in the food services industry. So all those altruistic reasons can be behind business charitable giving. And then last, of course, is front facing to customers. There's so-called return on investment, that I want my customers to see me being charitably active. I want to maybe attract some new customers. And I can do that because of the publicity that I receive from my charitable giving. So the return on investment, government relations, employee relations, altruism, and that return on investment with building relations with my customers are all reasons that inform business sector charitable giving. And none of them go away under this new federal tax policy. So will some businesses be persuaded to stop giving or give less? Maybe. But if they do, then they would lose out on all of those other 4 factors. Or instead, will those 4 factors carry the day? And again, we don't have research to know. There's no one size fits all. Every business is different. And so the key here is, if you're dependent on business sector charitable giving, you need to be talking to those individual companies. No doubt they've already given this significant thought, right? The new law went into place in July of 2025. And their marketing people, their community social relationship people, corporate social relationship people have been thinking about this. The accountants, the lawyers, everybody's been putting their brains behind this. Or maybe it's the family-owned business, right? Or the single person-owned business. And they've been thinking about how these new laws might affect their company's charitable giving. So make sure you're talking with them, each one individually, about how the new federal tax policy might or might not affect their charitable giving. Well, yeah, at one level, I hesitate to speculate, but really, I'm going to be shocked if we see a huge decline just because of this one tax policy. All things staying even, the economy staying even, the stock market still staying relatively healthy and so forth. Because again, government relations, employee relations, customer relations, and altruism are still going to be there. One other thing to think about is if a business says to you, yeah, we're going to scale back our charitable giving because we're not receiving the tax consideration anymore, is to remember that marketing is still a business expense that can be deducted. And if the private sector company's relationship with you can be described as marketing, right? They provide you with some funding and you provide them with some marketing, a banner hanging on a fence, a banner hanging at your room, a logo on the website, right? A banner at the special event, whatever the case might be. If that can legitimately be called marketing and not charitable giving, that's still a tax-deductible business expense. How do I know if it's marketing? Well, the good news for us is the IRS has publication 513. Publication 513. And if you read through, look for the lowercase letter I. 513, lowercase letter I, describes what marketing looks like when the business sector intersects with the nonprofit sector. And if your board and your legal counsel and your financial advisors, your accounting firm see that that's all consistent with IRS policy, if the business looks at that IRS policy and everything looks great, it could be an opportunity to stay in relationship with that business. So it's a new year, new federal tax policy. Fundraisers are leaders. We can adapt to the new situation. You will as well. Donor relations are always central to our work. And now this is just another factor as we're staying in touch with our individuals, letting them know about the UCD, our high net worth donors, letting them know about the ceiling and the floor and learning from them how that might or might not affect their charitable giving to us. If they now can increase their itemized deductions because of the increase in the SALT limit, what that might mean for their charitable giving. And yes, in this context, as we've talked about today, making sure we're communicating, talking with, listening to our business sector donors to help us understand where they're coming from with their charitable giving in this new environment. Of course, we know that the number one reason people donate, as well as foundations and businesses, for individuals, it's their philanthropic values and motivations. For foundations, it's their guidelines. For businesses, it's their, again, CSR type of guidelines, that those values are most important. These other factors associated with taxes is part of the wealth effect of giving, and it's just something to keep in mind in terms of how much people give and when. The why is always based on those values. Keep that in mind. We teach this in our 27 public courses at the Fundraising School that lead to 5 different certificates. We're in more than 10 cities in the United States, and of course available online anywhere across the world. Now, we can also customize training just for your nonprofit, just for your association, just for your region in the United States and anywhere across the world. We have quarterly webinars coming up in 2026. Of course, this weekly podcast and all of our information gathered in our textbook, Achieving Excellence in Fundraising, the book now out in its 5th edition. You can find more online at go.iu.edu/TFRS, go.iu.edu/TFRS for the Fundraising School. I'm grateful for our producers of the First Day from the Fundraising School podcast, Mike Anthony and Jennifer Boffman. I'm Bill Stanczykiewicz. Happy New Year, and you are now more fully informed on this first day from the Fundraising School.